Hi folks, Scott here, and this is the wrap for Tuesday, November 12th. So the markets are still live. I'm doing a membership webinar here in just a few minutes. But going into tomorrow, a couple of things are clear. We've put in a lower low, probably going to end up with a lower high and a lower close. But since I'm not paused, we still technically have 20 minutes. We're only 4 points from yesterday's close. I'm going to be more conservative and instead look at what has happened historically when fading gaps on options expiration Wednesday, that's tomorrow, Wednesday of OpEx week, went above the 200-day moving average. I will test those other scenarios, however we end up with today's price action for our members in the morning. And there you go. So odds favor a gap up on Wednesday of OpEx week when above the 200 by a little bit, about a third greater probability. However, the bias using an end-of-day stop clearly favors going long more so than shorting. You've lost a little bit of money shorting, a little bit lower than average win rate for shorting up gaps on this particular scenario, and longs have about a 10 percentage point better average for fading the gap than history historically. So clearly what I would call a long bias. Now I will rerun these numbers in the morning using our MTG stop parameters to confirm that this is a tradable scenario, that is going long on a down gap. And this is still a striking distance of being a reasonable shorting opportunity using intraday stops, but I'll have to rerun the numbers to confirm that. But it's going to be tight to make it. What I mean by that is using an intraday stop is going to make that number, that percentage, lower. Right, just by definition, this is an end-of-day stop. Intraday stop is going to make the lower odds. May improve profitability though. So there's a little nugget going into tomorrow. As far as today, let me show you what we had going into today. Ended up with gaps down near prior lows, sort of mixed zones. A little bit of a tricky scenario with these markets being a little bit out of sync. Russell and Nasdaq divergent from S&P and Dow. And inside of the prior day's range, on average across all 8 indices gap guides, was neutral to slightly attractive. Below was weak. And really, between the close and the low, the two zones here, the UCO zone and UOL zone. UCO zone was good, UOL was not. Only unique pattern in play today was after an NR 7-day Toby Crable pattern, most narrow range day past 7. That's just neutral for down gaps. And I'm not going to show this. Just trust me when I say the numbers are good for the UCO zone, but weak for the UOL zone. And that's what led me to write this up in my pre-market comments, posted right at 9:20 today. Last night's video had a unique pattern, fading down gaps after closing at a 5-day high close, but not a 10-day high close when above the 10 and 200-day moving average. Attractive. If following a 10-day low close the past 3 days, very attractive. So that was a huge positive, decent sample size. Very specific, makes sense. Price action shows a little bit of strength. So overall, the guides are neutral to weak for down gaps today. The other data, this and that NR 7-day, though, was mostly positive, right? Netted out, overall positive for fading down gaps. So they're mixed. Whenever the data is mixed between the gap guides and these other unique patterns, I'm generally going to sit on my hands at most trade a speculative position size. And I said, based on historically similar scenarios, not a bad setup for fading, but not a compelling one either. That's the key. I want to save my time and capital for the most compelling setups. So I'll take my, I'll wait and take my cue from the range guides. And this morning, they didn't show much on the 15-minute ranges, nor the first hour. Nothing was overly positive. The low fade was favored. I believe in the ES it has survived barely. It's looking like it's going to finish positive, which will be good for folks that took that trade. I didn't think it was compelling enough. I had data that favored a higher close today from our new closing odds site. Looks like we end up with a doji, maybe a little bit higher, depending on what happens in the next 15 minutes. But it was pretty compelling to the long side. So the good news is when the data is real lopsided like that, even the ones that don't work don't generally sell off a bunch. And markets are closing the cash close. I did no trades whatsoever today. Very busy trying to get closing odds on your website developed. If you are a member, relax. You're going to have all the data available here at Master the Gap. I will do a webinar explaining it all to you shortly when I get back from Vegas. We're launching closing odds in Vegas. If you're not a member of Master the Gap, check out closingodds.com. It'll be live this weekend. And you may want to start membership there, or if you're interested in it, just sign up at Master the Gap, and you'll also get all of our great gap and range data as well too. This one's a short video day because there's just not much for me to talk about. Another quiet, low volume day, and just patiently waiting for a good setup. And there you go. That is the wrap for Tuesday, November 12th. Have a good one.